Alright, hello everyone and welcome back to the Daily Show again. So today I'm a little bit early, so let's get started. So as you can see over here, what the weekly candle close is a little bit lower, so this could be a potential double top formation. And if you look at the daily in terms of the candlestick wise, this is a very nice bearish inverted hammer or inverted pin bar kind of reversal candlestick, and then followed by this week we actually close with a red bearish engulfing candle. The reason why it's called engulfing because you can see the entire body itself is a red candlestick, which means it opens at this close and then it closes below this body itself. So this by itself is a very bearish candlestick. And right now, price is actually falling below these supports on the daily chart. So definitely it's bearish, and I'm already have been entered in a trade. That's what I mentioned yesterday. And I'm holding close to 50% of I'm holding 50% of my position left, and 50% already been closed for taking profits. Okay, so let's update the market structure first. In terms of market structure wise, what you can see over here is the trend is still definitely strong because right now you still have this, and this aligned nicely. And secondly, you also have price very much above this 200 simple moving average. So even though, like I said, short-term wise, it can be on a bearish downtrend, but that doesn't mean anything much on the weekly trend, because weekly you can still see this is 9665, this is 9750, so it's still making higher high. Here is actually a low, but a lower low. So because of this, like what I mentioned, in terms of the trend is actually neutral, the market structure is neutral. The strength of the trend is still strong and still bullish, simply because you can see that price is above this 200 simple moving average on the weekly chart. Okay, so but bear in mind that as you can see from the price action, this is the first sign of bearishness, and this was a confirmation sign, so which is why it's leaning towards the bearish momentum on this side of things. So that's something that I have to highlight. Okay, let's look over the daily chart. So at daily chart, you can see that this was a sign of a potential squeeze, because you can see here the 20 EMA, one is break over, and then this is supporting it, the 50 simple moving average. So this squeeze itself, typically when it breaks above in either direction, will be rather strong. So as you can see now, it actually breaks below. So potentially, like what I said, if you have used the 4-hour chart, this would be your potential entry zone. So you will potentially entered yesterday and you have hit your target profit. So for me, this is what happened to me. I've actually entered based on the 4-hour chart. Somewhere along here, I saw there was a bearish engulfing candle. So I entered somewhere along here with a stop loss somewhere along here. And yeah, I took my profit around here for target 1. My target 2 will be somewhere around here, so that when it hits both itself, it will balance us out to around 1:2 or 1:2.5 kind of 2.25 kind of risk to reward setup. But if it doesn't, what happens now is I will also move my stop loss to the break-even point. So worst come to worst, if there's a strong pullback, I will also take my close my remainder position. Alternatively, I will also be look to close my position if this price doesn't hit here, but instead what it does is it actually reverses upward and closes above this high. So that's another way. So in fact, see this strong bearish momentum, what I will do is perhaps I would use a trailing stop loss approach rather than a fixed target. So I may close my fixed target of approach here. What I would do instead, if the prices on the 1-hour chart, say for example, it closes above this, then I'll look to take profit. So there's a possible way of taking profit as well. Yeah, but that's because today I'm actually available and free to actually do this on the micro managing level. Otherwise, I'll just leave the target profit over here. Okay, so in terms of the strength of the trend wise, let's look at it on the daily first. Daily. So daily, as you can see, the reason why I'm not sure is because I could see a high, a lower high, a low, and a lower low. So here is something that I ignore simply because you could see that this could be a very Elliott wave kind of corrective pattern. So I regarded this in one particular wave. But this is, remember that this is highly subjective, and this is if you're trading on a more experienced basis. On the other hand, even if you were trading on a pure objective manner, what you do is high, is a potentially lower high, is a low, is a potentially low low. So what you will do is you enter upon here. So your entry will be somewhere below this 50 simple moving average. The stop loss can be somewhere above here, and your target profit could be somewhere along here as well. Yep. So there's an alternative setup that you can have. So yeah, so there are many places whereby you could enter your risk to report your profit for your entry for your short position as well. So it really depends on how experienced you are to determine on when is the right entry for you. Okay, and let's move on to the strength. The strength of our mentioned is still strong. You can see these simple moving averages align nicely. In terms of the market structure wise, I want to mention the break of here, right, is closed. So you can see the daily closes actually closes above, so but that doesn't matter. So when it breaches below, I will actually trigger my sell stop order. So yeah. So right now in that case, technically for me, because I uses this high, this low, and this low, I will still technically classify it as a bearish market structure with a bullish market trend, which is why I choose to take profit earlier, because I do know that ultimately the trend is due to the bullishness side of things, as there's a tendency for it to bounce up until I see a clear close below these 200 simple moving average on the daily. Would I lean towards a trailing profit taking for my bearish setup? Okay, and let's look at the 4-hour chart. So on the 4-hour chart, you can see that there's some form of consolidation. As what I mentioned yesterday, you understand that this is a very consolidating simply because prices is ranging above, in between these 200 simple moving average on the 4-hour chart. And more importantly, you will realize that it's not really expecting it by being below or being above. So in that case, I don't take much reference to this. But what I do see is that you can see this is a high, this is a low, this is a high, and this is a low. So this pitch of a low, right, you can see has formed lower low, and there was an attempted higher high. This higher high failed to go over even here. So there was some sign of weakness. So if you actually have a buy stop order, you should not have been triggered, because if you just put a few pips above here, because I wanted to close above this 20 simple moving average, which to me was the resistance. So until it closes above it, I wouldn't have entered a long setup. That was the one I mentioned yesterday. So yeah, so moving on to be strong. This is bearish actually. Yeah, the reason why it's bearish is because price is now below this 200 simple moving average. It's the objective way. So the 8.6 to 8.7K region, and trailing stop loss. So for me right now, I will look at trailing stop loss, but I will see potential support. Yeah, somewhere 8.7. So no, that's why I mentioned, because right now I really do not see it'll be a bit too risky, because like what I mentioned, ultimately on the daily chart, price is still fairly above these 200 simple moving average. So I wouldn't take the unnecessary risk to take a trailing stop loss instead. What I do intend is just take the remainder of the profit at here 8,700 region. But if you're yet to enter a trade, then in this case, please do not enter any new trade, because you don't have a right place of reference to enter any stop loss. Wait for it to fall until a certain price level to find support or resistance, and then thereafter make a move after that based on the price action itself. So yeah, if not, that's it for the day, and I'll see you guys tomorrow, whereby I'll have an update in terms of the other traditional financial market. It'll be interesting to see tonight, especially with Bitcoin and the whole cryptocurrency market forming right now. It could jolly well be reflected in the traditional market as well. So other than that, thank you everyone for joining me today. If you have any feedback and comment, feel free to leave it down below. Otherwise, look forward to seeing you guys tomorrow. Bye bye.